It's the one that is related to the rally in the dollar, and that is gold, the shiny metal posting a 6th consecutive losing week, and that is the longest losing streak since May of 2004. But that run has not dampened the enthusiasm of our next guest. Take a listen to what he said to us back in September.
The currency that's about to collapse is the dollar, and that means the sky's the limit on gold. It's going to go to 5,000. I mean, it's just a question of when.
Peter Schiff of Euro Pacific Capital joins us once again. Peter, it is always great to see you. Happy New Year to you. I think that some people out there might, make the comparison of your comments to a broken clock. What do you say? Because
I've been saying gold's going to go up for 12 years. If you want to say I'm a broken clock, take a look at a 12-year chart. I've been right. Now, there have been pullbacks. I mean, it doesn't go up every day, but you describe gold as being in the gutter. I mean, it's hardly in the gutter. And as far as the dollar, it's not the king of anything except maybe depreciation. So I would be buying, this pullback in gold. People think that the Fed, based on these minutes, is going to end the QE early. I don't care what they talk about. I care what they do. They're more likely to up the size of QE this year than prematurely end it because we didn't go over the fiscal cliff. What does that mean? That means the budget deficits are going to be much bigger, and the Fed is going to have to print a lot more money to monetize them. That's why interest rates are rising right now. That's why the bond market is falling. And if the Fed doesn't print a lot more money and buy a lot more bonds, you're going to see a big increase in interest rates in this country. And the Fed is doing everything it can to stop that. Of course, that's the wrong thing to do. The Fed should be letting interest rates rise, but it won't because it knows this entire phony economy is built on cheap money, and it's not going to take that away. That's why the dollar is going to go down. And you guys are talking about the yen. The dollar is the currency that's weak.
Peter, let me just ask you this quickly, and that is within your fund. Do you trade around in your position in gold? I mean, do you use the pullbacks? Are you selling gold and then buying on dips? How are you managing that position? You don't simply just buy and just hold on for 12 years, do you?
Yeah, well, that's been a great strategy, right? Buy and hold for 12 years. Look at the chart. Look, we have mutual funds. We don't, and we have managed accounts and we have brokerage accounts. We recommend that our clients own a position in physical gold. They don't own it to trade it. They own it as a store of value. They own it as a way to protect their purchasing power over time. I don't have a short-term speculative fund that I manage. I'm not, a commodity futures advisor where we're trying to trade. We are long-term buyers of equities, of metals, of commodities, and we're trading these. We're riding these trends.
Peter, this is Kathy.
More likely than not, if you go back and look at gold over the past 10 years, every time there's been a major drop in the price, and if they're not major, but you get a 4, 5, 10% drop, and all the bears come out and they say the bottom's about to fall out. Those have been the best buying opportunities.
Excuse me? I just put some time frames on this because not everyone may have the same patience level that you have. And I've heard the 2,000, 5,000 call for years now. So when do you think we'll actually break that point?
Well, first of all, look, why don't you ask these questions of people who are in the stock market? The NASDAQ is a lot lower than it was 12 years ago. Every time someone comes on CNBC and says, I think you should buy stocks, do you say, well, stocks have gone nowhere for 12 years. Why, most people aren't that patient. Take a look at how well gold has done relative to the stock market. The stock market has gone nowhere during a time period where gold has gone up several fold. And of course, I don't care about what happens day to day, month to month. You're talking about long term. Look, gold was up in 2012. It was up 12 consecutive years. The stock market hasn't done that. But yeah, if you're frustrated because gold isn't already at $5,000, I can't help you. But gold, I think, is going to go there. In fact, it's probably going to go even higher than that. One day you're going to see the price of gold take off. I don't know exactly when it's going to happen, but there's a lot of people that are going to watch this thing take off from the sidelines, and who knows where they might end up buying it if they buy it at all. But if you understand the fundamentals of dollar debasement, and that's what's going to happen. We're running trillion-dollar deficits as far as the eye can see. In fact, I think we're going to have $2 trillion deficits before Obama's term is over, and the Fed is monetizing them. What is going to happen to the value of the dollar? They're not mining that much gold, but they are printing a lot of dollars.
All of your points are well taken, Peter. Thank you for your time. We appreciate it. Peter Schiff of Euro Pacific Capital. Let's go to Todd at the Money Maps. Todd, what do you see immediately for gold? And $5,000 someday,
that's
we could wait for a lot of things.
That's the thing. I mean, he may not be a trader, but our viewers are traders. And when the price got up to $1,800, $1,900 and we're hearing $5,000, a lot of people might have got burned by that. So we're going to help you time an entry. And right now, there seems to be better yield-producing entries right now, and it looks to be we're in a little bit of a downtrend. We broke out from about 1630. If we get back through 1630, we could have an entry down around the lower trend channel around 1400. So if you are trading, time your entries with us.
All right, Todd, thanks for that. Got a question out there, send us an email. The address is moneynmotion@cnbc.com. And if you want to learn more about currencies, go to Currency Class. It's our web-only tutorials that break down the basics of currency trading. They're easy, they're fun to watch, so check them out. The address is moneynmotion.cnbc.com.